Welcome back to the Investing Show. Joining us now on the show, we've got Jonathan Schiessl, Chief Investment Officer of Ashburton Investments and the manager of the India Equity Fund. Jonathan, welcome to the show.
Hi.
India, I think it's a place that investors find very, very interesting, but one that often UK investors don't necessarily stray too far into. It's been doing very well recently, hasn't it? I mean, what are the opportunities there, do you think?
Oh, I think you're right. First of all, I think it's still quite an exotic investment destination for the UK. I think a lot of people we speak to, if they dabble anywhere in emerging markets, would be a broad emerging market type entity, and going specifically to a country is quite unusual still. I mean, the opportunities are just vast. We could sit here for longer than we've got. I can talk about big top-down opportunities, the macro story, the reform agenda, the demography, all sorts of factors like that. And I think it's undoubtedly true that India is a great top-down story, so a big picture story, if you like. And I think one of the reasons which is fairly unique, one of the reasons why India trades at quite a high valuation compared to a lot of other emerging markets, is it actually also has a great bottom-up story. So you don't invest in a top-down story, you invest in companies. And one of the chief differentiating factors that India has is that it has a lot of investable companies that actually play into the top-down story.
So when obviously we hear about the emerging economies, often that's the story that gets told, isn't it? The top-down story, as you say, it's look at this country, it's got great demographics, it's got political change, it's got some form of economic catalyst that people think they have. But you can spend a long time waiting for those things to come through, can't you? And so actually what you're doing is you're saying, well, look, there's this great opportunity, but actually it's the companies here that matter.
I think that's true. I think there is possibly not enough work done by a lot of investors when they buy emerging markets, first of all. And why I say that is because there's the key point, as I said, you're buying a stock, not a concept waving around in the air. And so the key factor is in emerging markets, generally speaking, when we as foreign investors go and buy some shares in a company there, we are generally a minority investor. So the problem is there isn't enough work done on actually who you're sharing that shareholder register with. And in an emerging market context, it's usually the state, so a lot of state-owned companies which have a small minority that they list, or a sort of entrepreneurial family that might have been just listed the company or been around for some time. So the key point is you see these lovely top-down stories, and often the problem comes because a lot of companies, quite frankly, are run for the majority shareholder. So a lot of the benefits of the big picture story accrue to the big shareholder, and unfortunately minority investors are pushed to one side. And so what we spend a lot of time, and I think what needs to be done, should be done more, is when people are investing in these parts of the world, and India included, if you can find a majority shareholder who treats the minorities properly, then you tend to find that the benefits of the story accrue to you over time.
Given the kind of historic relationship between the UK and India, why do you think, even as UK investors, we would tend to think firstly of China as the emerging market, and India so often gets overlooked despite its pure and utter size?
So I think you're absolutely right. India has some advantages, but the fact is the emerging market boom that we've all got used to, that really started in 2000, 2001, when obviously the tech bubble burst and all that attention and emerging markets started outperforming, was led by China. And obviously China, quite simply, is the world's second largest economy. It's so much bigger than India. And so I think China just naturally, by its very size, sucks the attention to it. When the reality is, we do business in China. We go to China. I see companies in China as well, with some other stuff that we do. The English language is a huge advantage for India. It makes doing business in India, seeing companies, so much easier. And then the other thing is, one of the few things the British left in India that was of worth, if you like, was the institutional framework. So the concept of the shareholder is embedded. India has Asia's oldest stock markets. They have a good regulatory system. They have a good legal system. And so I think it does have a number of advantages, but just the sheer size of China still draws the attention elsewhere.
And is it possible to invest in Indian shares as a UK investor in the way it probably isn't, or it's very difficult to do in China, for example?
Yeah, so obviously in China you can invest in Hong Kong, but you can't invest in direct A shares, which is the domestic exchanges. But India is also a restricted market, and so today you can try and apply for a license, but it's a very laborious process. So I think most retail investors would access India via some sort of funded solution.
Yeah.
And what sort of companies are you looking at in India that you think are the most compelling to invest in?
I mean, there's so many different factors to look at. So I think the first and foremost important thing with India is it is a domestic story. So, first of all, we have huge exposures to the domestic sectors, as you'd imagine. And when we say a domestic story, why? Because of the demography. The simple fact is that working age population in India is growing till about 2050 or so. And what does that mean? That means that cohort, the working age population, is effectively supporting less young people and less elderly people as a proportion, not as a number, as a proportion. And therefore, the propensity of that group to consume is increasing, and the propensity to take risks, so they're going to invest more in markets and stuff. So that's the first thing, and that derives a certain, how do you grow your economy? Population growth, and productivity improvements. Now, India is benefiting from both of those because they're using technology as well. So they've got the population growth, they've got the reform or productivity improvements, and therefore it means an economy the size of India really should be growing minimum 6 to 6.5% just on those factors alone, and then you can add in urbanization and a lot of other factors. So when I say, so therefore the primary focus of our investments are on consumer-related sectors. Not all of them, because some of them are quite frankly obscenely expensive, like the staple sector, so your household goods, your shampoos and stuff, very expensive in India. But areas exposed to consumers, because that's a growing factor in India, it certainly is one. Industrials. So India has an infrastructure problem, quite clearly. It needs to build more roads, it needs to sort its railway system out. Huge demand for airports and all sorts of areas like that. So again, industrials, again, domestically focused. And then you could sort of spread it across the financials. It's a great time to be a financial in a bank. And with an economy going through the structural changes like India has, where I'm not sure if you heard, they did the rather unusual thing called demonetization late last year.
It certainly caught the headlines at the end of last year, didn't it?
It certainly did. And all these, and we can discuss that if there's time in a bit more detail later, but all these factors that are at play are pushing more people from the informal, which is estimated to be 50%, to the formal part of the economy. So to be a bank in the formal sector, your opportunity is growing dramatically. So credit is quite low in India as a proportion of GDP.
And they have a very high household saving rate, don't they?
It's fairly high by emerging market standards. The problem is how they've traditionally used their savings. So traditionally, India has had a high inflation problem. So when you've had savings in India, you've either kept it in cash under the bed, which is somewhat problematic when you have an event like demonetization, or they've predominantly invested it into gold and real estate. Now, they've been great inflation hedges, actually, gold and real estate, but things are changing quite dramatically now, and so actually you're finding the investment through government action is getting pushed into Indian capital markets. So it's a lot more efficient to use it. The trouble is with your money in gold and property, it's not very productive. So the government has had to rely on, or the economy has had to rely on quite a lot of funding from outside, and that's where India's Achilles heel has traditionally come from, because in times of crisis, global crisis, the funding's withdrawn. So clearly, if they can reorganise their savings and how they save, which they're doing, then that's a massive positive for India as well.
Do they also benefit in the way that China does, even though we insist on in the Western markets on a minute-by-minute update on what our economies are doing? China is usually taking a multi-decade approach. Is India taking a similarly long-term approach and ironing out some of the humps in the meantime?
I think so, but at different levels. And by that I mean, India is a democracy. So you have the 5-year cycle that all governments have hanging over their head. I think certainly China thinks a lot more longer term with infrastructure. It can build something a lot easier, quite frankly, and it does plan decades ahead. I think certainly having the political system in China enables that easier than a democracy like India. And India is also an incredibly diverse political culture. And it's fair to say that one of the problems up until this government was there was little that could get done because there were too many stakeholders who you needed to pull across the line with divergent interests. And I think it's fair to say that this government and this Prime Minister in India today are actually beginning to change that somewhat. So that's at a government level. I'd say it isn't that long term. They talk a good story, but the reality is they've been unable to invest in a similar book. I think companies, though, on the other hand, that's a different story because corporate India, when you've got an economy growing between 7 to 9%, you got, 4 or 5% inflation on top. So really company earnings, if you're an average company, should be growing 15 to 20% a year. Now, if you think about it in more simplistic terms, that means a company is doubling in size every 5 years. Now, high growth is just as dangerous as no growth or low growth for a company. And because of, if you really are doubling the size of your company in 5 years or so, if you haven't got a management team with the vision and the planning capability, the execution capability, then you're sunk because the growth opportunity will pass you by and you'll be left behind. So companies, the good companies in India today, do have to plan 10, 15, 20 years ahead to think where they will be. If they've got the moat, if they've got the business that actually they'll retain their competitive advantage. So I think there is long-term planning in certain parts of the economy, but perhaps we need more in others.
Sure. And as an active manager, obviously it's your job to sift through all of that and pick out the companies that you think are the best. Would there be a particular reason why you'd say going for that active option in India is a better bet than, for example, just simply tracking the market at a low cost?
Absolutely. So I think the stats, just quite frankly, speak for themselves. Most active managers in India today beat their benchmark, their index tracking type peers. I think a lot of the stats would show you that for, the tracking stuff actually isn't that cheap yet in India. It will get cheaper, sure, over time. But ultimately, I guess India isn't the most efficient market in the world. And the point is there's so many mid-cap and smaller stocks that you can look at that aren't in these indices that the opportunity to create extra alpha or value is certainly there. And the facts speak for themselves. Most Indian fund managers do manage to beat their benchmark by different degrees, but clearly it shows in India today active management works.
And one final question just before we finish, which is, I think one of the things that perhaps we look at from the outside at India actually is we think about technology being quite important there. What is it that you're seeing in terms of technology in India? How important is it to India?
It's staggeringly important. India is using technology in ways that we couldn't have imagined just 5 years ago. And India is using that technology to skip generations. This government is using technology to change the way business is being done, both at a government level and also at a corporate level and at individual levels, in so many different areas. And for example, there is, it's beginning to get slightly more known, there's a unique identity scheme in India where every single resident in India is given a 10-digit number and they attach technology to that number by using biometrics. Once you have your biometrics and the number, you then can, that's all you need to open a bank account. So this is technology, and it's a very low-cost bank account through your phone, if you need your smartphone, etc., etc. So suddenly, just through the use of good government, a bit of technology, the formal banking system is reaching out to pockets of the economy that previously could never go anywhere near a proper, low-cost loan. You'd have to go to your money lenders, etc., etc. So that's just one small example. That scheme, you can roll it across rooting out corruption, that they're using it in so many different areas. And I could,
They're using it for social security as well.
So a lot of the welfare schemes in India today, for example, bottled gas. Every family has a right to so many gas bottles a year, cooking gas bottles a year in India. And previously you had to go to a government depot to get your gas bottles. Now, when they started introducing it, they said, okay, we'll give the consumer choice. We'll give the money straight into your bank account, which if you have this 10-digit number and you can, you've got a bank account, we'll pay it straight to you. So you as a consumer get choice. You don't have to go to the government place. You can go wherever you want or do what you want with that money. So what they found in one particular state was that something in the region of 45% of claimants who were previously claiming these gas bottles were ghost claimants. And this one scheme, now they've rolled it out across India, again, for one welfare scheme, has saved something in the region of $5 to $6 billion. So it's just clever using technology, just very prudently, and given the consumer choice, and the government saving money as well. So it's a sort of win-win situation.
Fascinating. Jonathan, I'm afraid that's all we've got time for. Thank you very much for joining us. Richard, thank you for joining us.
Pleasure.
Thank you very much for watching. See you next time on The Investing Show. Goodbye.